You know, the financial markets served up a real head scratcher last week. We had all this global news that you'd think would push everyone in the same direction, but instead, two of the world's biggest markets ended on completely opposite notes. So, how did one absolutely soar while the other one just stumbled? Well, let's break it down. So, check this out. On one side of the world, you have India's Nifty 50, which saw its six-day winning streak get snapped pretty decisively. On the other side, you've got the US's Dow Jones surging over 1% to hit a brand new all-time high. It's like a party versus a pause.
So, the big question is, why? What on earth could be happening to push one major market to a record high while pulling another one down at the very same time? To figure that out, we've got to start with the shared global backdrop that all investors, everywhere, were watching.
Right, so every single investor, whether they were in Mumbai or New York, was looking at the same global news cycle. And let me tell you, it was a week packed with some major headlines that really set the stage for everything that followed. Okay, three big stories were really dominating the conversation. First, the US-China tech war got even hotter, with the US threatening these huge software export controls. Second, gold, just collapsed, dropping 5.7% in a single day. And third, through all that chaos, investors were still betting that the US Federal Reserve would keep cutting interest rates. So, that was the stage. And to really get just how serious that US-China situation was, you have to hear this quote that was bouncing all over the place. Everything imaginable is made with US software. We're not just talking about a few companies here. This threatened to disrupt global supply chains for, well, everything, from our laptops to jet engines. It created this huge cloud of uncertainty. So, with that in mind, let's see how this all played out in India. The story for the Indian market this week was a total roller coaster. I mean, it was a week that promised so much, it even hit a new milestone before just slamming into a wall. So the week kicked off a little weak, then it bounced back a bit, and then came Thursday, the big day. The market surged to a brand new high, but it just couldn't hold on. By Friday, all that momentum had fizzled out, and the winning streak was officially over. On Thursday, the Nifty 50 actually crossed 26,000 for the first time in over a year. That's a massive psychological victory. But, and this is the really crucial part, it didn't last. The market immediately faded from that high, which is a classic sign that sellers are stepping in to take profits, and that maybe, just maybe, the conviction is getting a little shaky. And there was another, more technical reason for that anxiety. Yeah, it all came down to this major rule change. For years and years, the big monthly derivatives contracts expired on the last Thursday, but that just got moved to the last Tuesday. Now, this might seem like a tiny detail, but for traders, it changes everything: how they manage risk, how they position themselves. And with the first big Tuesday expiry just days away, this new uncertainty was creeping into the Indian market. All right, now let's pivot across the globe to the US, where the story couldn't have been more different. While India was grappling with all this local uncertainty, the American market found a powerful reason to party and rally to brand new records. And the catalyst was actually pretty simple and incredibly powerful. Friday morning, we got new data that showed inflation was cooling off more than anyone expected. For investors, that was a massive green light. It basically shouted that the Federal Reserve has plenty of room to cut interest rates, which could boost the economy and make stocks look way more attractive. And the rally was broad, it was strong. The Dow was up 1%, sure, but the real leaders were the smaller companies in sectors like metals and mining. Now, these are the parts of the market that do really well when the economy is expected to grow. So their leadership told us that investors weren't just hopeful, they were getting really confident. So now we have our two stories: an Indian market that's hitting a wall of local pressures, and a US market that just got a jolt of fantastic domestic news. Okay, let's connect the dots and finally answer our big opening question. So this big split really came down to a collision of local forces. India was facing its own set of headwinds. You had investors cashing in their profits, and you had all this anxiety over a new trading rule. At the exact same time, America was enjoying these powerful tailwinds from great inflation news and renewed hopes for a Fed rate cut. So while the global news was the backdrop, it was the local stories that wrote the week's final chapter. This whole situation sets up a really critical dynamic for the week ahead. So, what should we all be watching?
Well, there are three big things. In India, all eyes are going to be on Tuesday, October 28th. That's the first major test of those new expiry rules. How's the market going to handle it? Over in the US, the weekly jobless claims data will give us the next big clue about the economy's health. And of course, hanging over everything is the ongoing US-China trade story, which is far from over.
And that leaves us with this final massive question. We just ended a week with two major markets on two very different paths. Was this a temporary split, or is it the beginning of a bigger divergence? The coming week is definitely going to start giving us the answer.